Gold yielded a second bearish week as we discussed in our last update that below 1980 levels and 1970 levels, prices are going to stay bearish. In fact, it has seen a massive drop towards 1940 and 1933 levels here before closing the week at 1938. Does this mean can we expect another red candle from here, and is it going to crash further, or we can expect a bounce back from these levels here as it is still trying to trade in this bullish flag formation? Which position you should take trading gold next week, we will see with the help of charts and indicators. Towards the end, I will give you the trading levels and strategy. Do watch till the end. If you are new to the channel, do subscribe to the channel to get the latest updates. I release twice a day update for gold, first with the Asia and Europe session and next with the US session. Let's start first. We'll look with the help of charts alone. Now on the daily charts, if you look at increasing bearishness, a slight consolidation, and then this breakout has happened, and this was the first red candle. Now this is the milestone which gold needs to break past by, that is at 1960. And if you look at it, has left a minor tail on the downside. Yes, 3 to 4 consistent bearish candles here. Second thing is, if you observe, this was the rally, this was the time when gold has given a breakout, and now it is almost on the verge of this erasing the gains from where it has started. Now also this zone here at 1920, 1910 is a greater support zone here for gold. We have to be careful around these levels. If you carefully observe, 1925 is what I will look forward for gold to break past by. If it breaks below 1925, you can say more bearishness will prevail, and we can look forward to 1915, 1910 zone as a greater support, and below that is where the bears will take over. Now also there is a gap on the daily charts which is to be filled at around 1845, 1835 levels. So once it breaks below this zone at 1910 and 1925, you can say more bearishness may prevail, and the probability for it to breach towards 1860, 1880 zone will be high, and then further bearishness may take it further lows as well. But whether it is going to move towards those levels, let's have further detail. If you look at the gold on the daily chart, see here it was trading so far in this bearish zone. It has given a breakout and now trying to erase all the gains. Now this is first at 1910, 1925 first support zone, then towards 1880, 1860 the next support zone. Below that certainly it is going to fill the gap. Also what is happening here is, see the rise, retracement, rise, retracement, rise, and again it is trying to retrace. So possibly it may take a sideways move here, because see it has shown a breakout very recently. Thus the probability for it to reverse exists very strong. Now let's have a look at the weekly. Now on the weekly chart, see preceding two candles were with higher lows, lower highs. There was a reversal sign, and then this first red candle has appeared, and this is a deeper red candle. Also it is closed almost at the bottom. Thus we need to watch out. If it breaks below 1930, we should not think of buying at current levels. First support at 1925, then 1915 and 1908 levels will come into picture. Below that certainly more bearishness may prevail, which can take it below 1900 and 1890 zone. Yes, it can try to give a deeper red candle staying below 1925, 1910 zone. More bearishness is going to prevail. Now so far on the weekly charts, we have seen it staying higher lows, higher highs. I will just wait for it to break below 1925, 1910 zone, and then it will continue its downward move from those levels. Likewise on the weekly charts, after 3 straight bullish candle, first red candle, second red candle here, and the probability for it to give third red candle exists strong, because the preceding candle was a breakout and it has closed at bottom. Thus in fact we can look into this zone here where gold might try to fall back within this zone and stay in this retracement channel. After the drop, this is retracement, this is a bullish channel. So the bottom here certainly at around 1880, 1900 is going to be the next support zone below 1910, 1925. Now let's have a look at the monthly. Now if you look at the monthly candle, higher highs, lower lows in the preceding candle, it was a swing candle, and the move was from 2010 to almost 1810 levels here. So the median here is somewhere at around 1910 levels here, and this is the first support zone. Then next is the 1880 levels. Now this is going to be the zone. If gold breaks past by, don't even think of staying long further. We can say that prices have completely reversed, and it can look forward to 1850 and then 1835. In fact, it can break below 1800 as well, and the probability of bearishness may increase below 1880 zone levels. Now let's have a look with the help of indicators. What does the indicators are suggestive of? See, previously prices were divergent from the 20 period moving average. We have seen prices converging towards the 20 months average, and then this reverse. Now you look at the 20 months average is at 1880, then 1860, and below that more bearishness, and it is right now showing a pull towards the 20 period moving average. However, remember the month has just started. If it has to stay bullish, if it has to bounce back, this is a perfect level to bounce back from current levels, because see, it will create a good tail, and from these levels, if it reverses, we may see it moving towards all-time high levels. That is also possible, and it is very likely, because if you look at the formation here, see, one green, one red, two red, the possibility of a slight formation of a double red candle, a greener candle exists, but we have to wait for it to stay above 1980-85 levels in order to confirm a reversal. Else, the possibility for it to drop again, right now it is looking strong. But as I said, the bearishness only to prevail once it stays below 1910, 1925 zone. If you look at the monthly stochastic, after hitting the bottom, it is looking upwards. It is still having bullishness intact. It can further rise from these levels. And the MACD as well, almost staying flat right now, and it is in a greener zone. It is not yet crossed over, it is not yet divergent, it is trying to keep itself almost flat. So possible crossover is below 1810, 1880, 1910 levels. Only this zone, when it breaks, you can say that the price is the monthly stochastic will again cross over, and then we can see a round of fall. But right now it is not, it's still in the greener zone. RSI almost staying flat. Coming to the weekly chart. Now on the weekly chart, see, too much of divergence from the 20 period moving average. Prices have converged towards the 20 period moving average and towards the median of the Bollinger Bands. So yes, it is ideal levels which it has achieved, and if it stays below, then you can say, see, 1910, 1925 you have to watch out for. If it stays below this zone, then only I will confirm this as bearish, else the possibility for it to bounce back exists strong. At best, the 50 period moving average will come to the rescue, and if it breaks below this, then certainly more bears will prevail. Stochastic on the weekly charts was overbought, and it is cooling down, it is looking downwards. Thus, possibility for it to yield another red candle exists strong here. And if you look at the weekly charts and stochastic, see, this is one observation which is still suggestive that gold might bounce back, and this week the lows which it achieves might remain the lows for this month, and possibly we can see a good recovery. That will be my expectation. Why? Look at the weekly charts here. See, stochastic, lower lows, higher highs. It has come to the median, and it has reversed from the current levels. It is still looking upwards. Now, if you look at the stochastic, this has converged a bit. It has not yet crossed over. I will wait for it to cross over and move below zero levels. That is the point at which you can say that prices have turned bearish. Else, it has all the possibility to yield another green candle and move upwards. And this is why I say possibly the move is going to remain range bound in the coming week, where we may see it trading with slight bearish bias but not completely bearish. And after consolidating for a while between 1910 1925, it can possibly bounce back strongly. So yes, you have to wait for 1930 to be breached. Below that, below 1930, you have to enter a sell position for 1925, 1915, 1908 levels. And at this zone, we may see prices stabilizing and then recovering. This is one expectation. And if it does the same, just stay long in gold. Next week, we can see, next to next week, we can see more bullishness, and we may see a bounce back. RSI looking downwards, trying to stay bearish here. Coming to the daily. Now, if you look at the daily charts, you will observe, see, prices were too much divergent from the 20 period moving average, and that is why I say it must try to converge towards the 20 period. It has in fact breached the 50 and 100 period moving average as well. Also, it is closed below Bollinger Bands, which suggests that there is a downward pressure here. Now, see, it is breached the 20 period, 50 period and 100 period, almost has touched 100 period levels here. This is a support levels from the 100 days average and also the pivot levels. and it is outside Bollinger Bands, thus the probability for it to retrace for next couple of days exists strong, where we may see prices moving towards at best 1950 1960, or if it breaks past by the zone between 1950 1960, you can say that a reversal is initiated and a possible rise towards the zone exists strong. But do not treat this for a complete reversal as long as 1985 levels are respected. We have to be watchful here. Also, one must note that the moving averages crossing over here is a bullish sign. Stochastic on the daily charts has come to oversold levels. The MACD, and this is what repeatedly I have mentioned in my daily analysis, that the MACD has achieved the peak and it must cross over. It is crossed over, traded with divergence, looking downwards, and it is still scope for it to continue with the downward move before looking upwards from here. But trading with more divergence calls for it to converge a bit. Even if it has to stay bearish, it can converge. Thus, for the first couple of trading sessions in the coming week, we may see gold retracing a little. How far? 1950, 1960 zone. Yes, greater resistance zone. Once you see it staying above 1960 levels, one can expect that we might see it moving towards 1970. And then once it stays above 1970, 80, 85 is the level you should watch out for. Beyond this, it is a complete reversal. Else, right now, it is still trying to trade bearish, and 1950, 1960 zone is going to prove a greater resistance. RSI looking downwards, trying to stay bearish here. Let's also have a look at the 4. If you look at the 4-hour charts, see, if you track the formation here, moving averages crossing over here, trading with divergence and bearishness. Now, this is the resistance zone, and the possibility for it to retrace a little. First, it has to stay above 1944, 48 levels as the greater support levels here. Now it is going to be the resistance, and once it stays above 44, 48, you can say that it is going to retrace on the upside towards 1957, 60 zone, and from those levels a reversal can be expected. But if you look at the formation here, see on the 4-hour charts, lower highs, lower lows are there. The drop, the retracement, the retracement towards 1950, 54 exists strong. The stochastic is oversold. This may call for a pullback. MACD is divergent and bearish, and see, MACD is almost about to erase all the gain which it has seen, and it can possibly now crossover. I will wait for the crossover specifically. RSI back to again oversold levels. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy. And before I give you the trading levels and strategy, if you want to learn this art of trading, you can join my mentorship batch. The 27th batch is going to start on 28th of November. Visit my platform forexfunda.com. On the first page itself, here at this tab, you will get the details to join the batch, the curriculum, the timelines, and the support and the services which you will get along with the batch are mentioned here. You can also buy and book there itself. Also, today we have the webinar with the weekly insights for next week, and I will be taking up your live questions as well. Thus, register for the webinar. Yes, we have this platform has an interesting content where the market tickers, the breaking stories, and also the economic calendar. Here you'll find the economic calendar, you'll find the markets, where you can just search for your favorite tab, search for your favorite instrument, and do the charting. You can schedule a call with me in case if you need any guidance or consultation for any of your existing trades, existing accounts, or any of your future investments. Yes, the discussion tab is where you can find the fellow traders who can engage into an enriching discussion in order to arrive at an informed outcome. Thus, book your seats by visiting our platform forexfunda.com. And yes, if you want to trade as per the signals, you can join my signals channel on Telegram. Reach out to me via Telegram or email for more details. Now, first let's talk about the levels to buy. See, 1943 first buying level. Be careful. Rather, I will 1944 first buying level, 1948 nearest resistance, 1954 the third level, and if it stays above 1954, one can look forward to 1960. Now, see, these are very nearby, and this is the greatest resistance zone for gold for the coming week. So even if it tries to retrace, I will expect it to find greater resistance in between these levels, and possibly we may see a little consolidation Even if it has to trade bearish, it can possibly bounce back towards these levels. Now below 1960, beyond 1960 is where we can see a further move towards 1970, 1978, and then 1984. Now if and only if you see prices staying above 1984, you can say that we are looking forward to 2000, and this is applicable not only for next week but also for the complete month beyond 2000. This time we are looking at 2020 and 2050, 2075 levels. Yes, it can move towards all-time highs again here. Thus be watchful here. It can possibly reverse, staying above 1960 first resistance zone, then 1985 second. You can say complete reversal is seen. Now where to sell, because there could be slight bearishness. I will recommend you to sell at 1930 levels. Expect it to move towards 1924.5, 1918 or 1915. Other, this is completely a good support. This zone it needs to break past by, and below that 1908. So once gold stays below 1908, you can say that it has turned bearish. We are going to look forward to 1900 and 1880 levels. Now 1880 is the next milestone. Below 1908 and 1950 zone, 1880 is the next milestone, is a greater resistance here. If it stays below this, then directly we may see it landing to 1860 and then 1835, and these levels will remain applicable. Yes, for the complete month, and specifically for next week we have to watch out how it behaves between 1910 1925 levels. So take your trades accordingly. Trade with a stop loss and a trailing stop loss. Like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or trading queries. My Telegram and email IDs are mentioned in the channel and video description. Do visit my platform forexfunder.com for more details on my services offerings, which is the mentorship batch and the webinar and the signals channel. See you again on Monday in the coming week with twice a day updates. Watch the updates as well. Thus, press the like button, do share, subscribe, and comment. Thank you.